And as you can tell by my title, I'll describe what we're going through as we're returning back to normal. Now, here's the one thing I'd offer this. This is a little bit smaller group. Feel free to ask me any questions at any time. Don't worry about stopping me. I'd rather answer your questions than necessarily get through these slides, because it's more important to answer what questions that you have. But I do want to set up why am I saying a return back to normal. And I think it is really, when you look at the corn and soybean markets, I'm going to argue what we've been in on an incredible run. And that run has allowed us to, let's face it, put on some healthy profits over the last few years, as we were talking about just a minute ago. But the idea is $6 corn normal. God, we wish it was. But I would also say if $6 corn was normal, there would be more people in this room. The idea is if $6 corn was normal and you could always guarantee a profit, everybody would want to be a farmer. Not everybody can be. And if I could take you back 5 years ago, so just before COVID, if I told you we'd be sitting here at 2024 and looking forward, we'd have prices in the mid fours, my guess is back then most of you would have been happy and said, sign me up. The only reason we don't like it today is because we know where we've been. And let's face it, when you get used to that higher income, it's hard to adjust back down again. But as I look at the markets, what I see are markets that are basically coming off some record levels and now settling back in towards normal. I'm not going to say that it's bad, but I'm also not going to say that it's good. I'm going to say that it's the Goldilocks moment. Prices are going to be around cost, and that's what's normal in any competitive market, which what farming is. Farming is a competitive industry. The way we got here is basically a strange combination, though. So what I'm showing you here, these are the 2020 through 2024 crop columns here. I'll lay it out this way. The first three columns, 2020, 2021, 2022, those are rock solid. We know all those numbers, they're locked in place. 2023 column, that's the one I want you to take with a grain of salt right now. Because I'll describe it this way. When I say a year, like 2023, I don't want you to think calendar year. I want you to think crop marketing year. My 2023 started in September. And it'll end next August. Basically looking from harvest to harvest. So right now, we're at like June in my 2023 year. We're halfway through. Which means as you look at that 2023 column behind me, the top part in white, that's the part we know. We know the supply side. And it turns out 2023 was the biggest corn crop we ever produced. There's a record yield up there and record production. What's still moving around is that part in the gray box. That's the demand side of the market. And that one is still moving for the next 6 months. And so we're trying to guess how demand's going to fare as we move forward. And when you get out there to that 2024 column, okay, I don't want you to take that one with a grain of salt. I want you to take the whole darn salt lick. Because that's the one that is complete guesswork right now. As we look out there, that's basically from September of 2024 to August of 2025. So that's 6 months away to 18 months away. Those are USDA's best guesses right now as to what we're going to go through. When you look at what we've been through in the corn market, I would argue what we've had is incredible productivity. Basically, all those years up there, as you look at 20 through 21, 22, 23, we've had incredible production, yields north of 170 bushels per acre. That's despite a drought living somewhere in this country that entire period of time. So we've had big crops. And normally when we get big crops, what tends to happen to prices? They tend to go down. Yet, notice, look at the bottom line here. During those big crops, we actually saw prices go up. How's that possible? Well, because you had demand. You had big demand as well. In fact, when you look back at 2020 and 2021, I'm going to argue what you're looking at is record demand. And the big line I actually want to pick on is the export line behind me. And I'm going to argue it's exports that took us higher. It's exports that now are bringing us back down. And it's exports that will determine which way we go from here. And as you look at what USDA shows us, what I'm going to show you is that if you look at that 2020 column, you look at that 2.7 billion bushels there. And I'm going to tell you that's record demand. Record in terms of bushels. We've never moved more corn into the international markets than we did in 2020. Now, I'm also going to point to that 2.47 for 2021 and say that's a record. And you're probably like, Hart, you've been drinking a little bit too much. They both can't be records. In fact, 21 is lower than 20. How can that be a record? Well, I want you to look at what prices did in between those years. 2021 is the record in terms of dollars, the more important record. We never made more money off the export markets than we did off of 2021. What's driving those records? Three-pronged thing of international demand right now. What we had was coming out of basically what would have been the 19 crop, so early 2020. That was COVID. But once COVID sort of wrapped around the world, and everybody had it, we got turned loose again, kicked out of the house. What did we do? We went on a shopping spree. We saw this worldwide, and we saw demand for all products sort of shoot up really high. Ag was no exception. We saw records across the board. You combine that with income growth in Southeast Asia, and I'm going to argue it's income growth that really drives consumption growth. And just to put a little cherry on the top, the last little piece I needed was the phase one trade deal. You put those three things together, you get record demand. That helped build demand through those first 2 years. The problem, though, is as that continued to drive prices higher, those higher prices begin to wear down those factors in demand. Think about high prices here in the US. We've been complaining about inflation now for what? A couple of years now. Those high, inflation's just high prices. What's high prices do? It makes you slow down your consumption. Well, that's exactly what you're seeing in the export markets as you look today. In fact, as you look at corn, you'll notice that go forward to 2022, that bushel number continued to drop to 1.6. The price went up, but not enough. We saw that demand slip. So prices went down to try to reinvigorate that demand. That's what we're doing right now. And you can see that USDA says that demand, export demand, is going back up. Gaining back up to 2.1. We're finding some sales out there, but they're not big enough to necessarily pull prices higher. And the question going forward for 2024 is, can they get bigger? But as you look at this right now, I'm going to argue the key number for right now is that 480 on the price line down there. Because that 480 is setting the stage for what we're about to plant this spring. I always like to say I don't look at price ratios, things like that. I look at profitability. And when I'm looking at the corn market right now for 2023 crop, that price of 480 tells me most farmers are staring at a situation where if they're pricing crop right now, they're below break-even cost. Our production cost estimate going into 2023 was $5. We're at 480 now. There's a little bit of loss there. And when we see a little bit of loss in the market, what do farmers do? They react by planting less of that crop. So now let's start looking forward to 2024. Look up the top line, acreage. What's USDA say? They say we're going to plant less corn. Drop down about 3.5 million acres to 91 million. It's still a lot of acres around the country, but it's likely what we're going to see, and I'm going to argue it's going to be mostly the Great Plains. You're going to see them shift away from corn to soy. That 3 million acre drop is helping pull corn production down, but not by that much. In fact, as USDA is looking forward, their trend line yields 181 bushels. And right now, when USDA is making the yield projection, they don't look at weather. They don't look at the yield map. They don't look at anything other than history. Take the last 30 years, map out those yields, draw a line through it. That's the number you get. You put those two together, you get another 15 billion bushel corn crop. Which means I'm staring at another big crop. So I need demand rebuilding to catch back up to that. And as USDA is looking forward, they do see demand growth. It's just not fast enough yet. And that's the challenge. And when I look at those lines in demand, you'll notice that they've got the feed and residual number going up. It's going up 75 million bushels. I'm going to tell you how that feed and residual, let's look feed versus residual. One of those two is growing, the other is not. Which one's growing? Residual. Why is feed demand not growing? Record low cattle. Or as I like to joke, I'm going to hire a student eventually to tell me how many chickens does it take to replace a cow. Because right now what I'm seeing is the cattle market continues to shrink, and that's pulling down on those feed numbers. And while pork is trying to shrink, but can't help themselves. They're too productive, they continue to grow. The broiler's growing, but not fast enough to replace those cows. And so what we're seeing here, residual usage in corn is harvest loss. It's when they can't figure it out what else is happening to it, they assume it just disappears. That's what's growing. Big crops mean big harvest losses. As you look at ethanol, it's up 25 million bushels, but that's not really much of a change. And it can't really move that much beyond that. Why? Well, how many new ethanol plants are we building? That one's locked in. When you look at food, seed, and other, that's the one where I am seeing a few pop cans. It's good to see. That's corn sweetener demand. That's what that food, seed, and other line is. And as you look there, that one's been sort of declining a little bit, but now flat. So the line that I come back to is this export line, and USDA shows some small growth there. I'm going to show you some data. We'll argue about whether they should be picking up the pace on that or not. I am seeing what I'll call slightly encouraging signs as we look out there. I think that export demand number could be higher. And if it is higher, that helps hopefully stabilize and start to prop prices up a bit as we look out there. But right now, USDA's official forecast, production's here, demand's here. That means building ending stocks and lower prices as we look out. Basically for soybeans, it's the same story. You looked at really good crops for the last few years, despite a drought, averaging around 50 bushels per acre. Demand, actually really strong to record demand back here, has fallen off a bit, mostly because of that drop in exports. We saw the same pattern here, record bushels in 20, record dollars in 2021, but then once we got beans well into the teens, that export demand backed off. The big difference here is where corn is sort of recovering right now, beans hasn't started yet. But beans does have some growth elsewhere. If you look at the crush line, you'll notice that has been growing over time, and it looks to be picking up a bit. We're going to be talking about the next wave in the biofuel industry. That's helping support bean prices long run, but not necessarily here in the short run. But again, as I look here, what I see here is a 1265 for the crop that's in the bin right now. That's a little bit above our production cost number right now. That means there's still a little bit of profit here, which means what do farmers want to do? Plant more beans. That's why I said the Great Plains guys are going to shift to beans. That means as we look forward for USDA's projections, we're looking at the possibility of a record soybean crop, which means, again, I need record soybean demand. And right now, we don't see it building up there. But again, I would argue exports would be the key to get there because it's the demand that can move the quickest. You can tell, like I say, it's not necessarily a happy story, but I'm going to argue it's also not necessarily a bad story. Because I want you to think about the last time we saw beans in the teens or corn. Whoa, what did I do there? Or corn north of $6. I can get there. When was the last time you saw that? 12, 13. What did we immediately follow that up with? No, drought was 12, 13. What did we follow it up with? $3.50 corn. Usually when we get profits like we've just had, we immediately sink ourselves down in a hole. I would argue what we're doing now is we're not digging that hole nearly as deep as we did today, which is a good thing. It is the best cure for high prices is high prices. That's exactly it. It's not like I'm saying anything earth shattering up here. We know this is the way this game is played. It's just, you hate to go through that downward cycle every time we do it. Now, when you look out there, I would point out that the drought is still out there. This map, I've had it now for 4 years. I've joked that I've had it so long, I am now an honorary meteorologist, which is a dangerous thing for an economist to be. But as you look at this map, the thing I want to point out is, yes, that drought is still out there. Actually, for Iowa, you could argue that going into the planting season, this is almost as bad as we've seen it for the past 4 years. From a statewide basis, we've never had more of the state in D2 or higher drought during this last 5 years. Well, in fact, what's been funny about this drought is, like I say, it's been here since 2020. What's been interesting about it is where the heart of the drought is. I could argue when you look at it today, it's either over us here in Iowa or it's down here in New Mexico. I can't decide where yet. But early in 2023, it was us. And back in 2022, it was Kansas and Nebraska. And in 2021, it was the Dakotas. In 2020, it was Texas. This thing was always out there. It's always threatening crop production, but did it do significant damage? No, I just showed you is we had really good crops despite it. In fact, I joked that the folks in the back of the room did their job too well. They created drought-tolerant varieties. Did they work? My God, it looks like they did. Impressive. Challenge is, can we do it again? Because right now, as you look at it, drought's still out there. And here's where, when you become an amateur meteorologist, if you stick around long enough, they give you more than one map. Here's my second map that I got. It's from the National Weather Service. This is looking at the outlook as we look through the planting window. So this is basically the forecast through May 31. Where you see color on this map, you have drought right now. The color tells you whether you're going to stay in drought or it's going to get better. In this case, the darker the color, the rougher the story. What color is northern Iowa? Mud brown. That means the drought persists as they look over the planting window. But look at southern Iowa and out into Nebraska. A little bit lighter colors. The tan tells you drought continues but gets better. The, I guess I'll call it green color, says drought disappears. So if these guys are getting more moisture, I'm going to argue that's a good sign for us as we get into the heart of the planting season. Because where do they get moisture from to improve that drought? The Gulf, same place we get our moisture. That tells me if that train is starting to move, it should help us along the way. And I would say that's the thing that the National Weather Service, on a grand trend, is expecting to see, but it's going to be, let's call it a quick window. In fact, I believe you saw this graphic earlier in the slide set too, but I think I've got a newer version. In this case, this is the most recent look at that El Nino La Nina cycle bit. What you're seeing here, the bars are showing you, whoops, sorry, there we go. The bars are showing you the probability. So this is, again, model-based thing. They're sort of saying this is the likelihood. Red indicates El Nino. Gray indicates neutral conditions. Blue indicates La Nina. The way I usually tend to think of it is red, El Nino tends to mean we get more moisture. Blue tends to mean we get less. The drought we've been living under for 4 years, that started in 2020, was brought on by a strong La Nina that basically only went away last year. And now we're in a good-sized El Nino. But as they look out towards, when we're planting, say April and May, that would be these areas here, They're saying that El Nino is going away, and we're going to move to neutral conditions by the time we get into the growing window. But then as we get deeper into the summer, we're going to flip back to La Nina. From my perspective, that means we may get some rains in the middle, but it may get tough at the end. Which means, again, we're going to need timely rains to pull off the crop sizes that USDA is talking about here. So weather is still a factor, but I'm going to argue it's going to be one of these things, sort of like we saw this past year, where the market sort of ignored the drought January, February, March, and we watch our prices work down, down, down. Basically, they worked their way down until June, and then what did we see? A nice big spike up, as everybody figured out the drought was still out there. That lasted until it rained in Chicago one day, and then what did the market do? Drop back down again. And I'll show you that here at the end. Expect something like that again as you look out there. Now, like I say, we produce pretty good sized crops. But I would say the size of these crops also helps me tell the story of why I think we're going to see the planting shifts that we are. And I especially want to pick on the Dakotas. Because as you look here, and I always hazard to put these maps up because USDA makes them, and they're red versus blue maps. And when you see red versus blue, what's the first thing you think of? Don't go there. Don't go there. In this case, blue means whatever you're looking at went up year over year. Red means it went down. The intensity of the shade tells you by how much. So in this case, as you're looking at the corn yields here, top number is the average yield in the state. The bottom number is the percent change. So Iowa, 201. Changed by 0.5%. That's 1 bushel. 2022 crop, we averaged 200. So despite that drought being here, we've averaged back-to-back 200 bushel crops. We've had a pretty good year. You can see that as that drought moved east, it carved out around Iowa. But I want you to notice those improvements in the Great Plains. The drought moved away from them. They saw bigger yields. But I'm going to argue those bigger yields are now setting them up for changes this coming year. And it really didn't hit me till I got to travel up there. So at least once a year, I got to go up to Fargo to talk to North Dakota farmers. Why do they want a guy from Iowa coming up to talk to them? Well, because they've been moving into the crops that we grow here that they traditionally don't do. After all, the Dakotas used to be wheat country. Now they're doing corn and beans. And by the looks of it, 143, 152 bushels, those are good yields for them. Well, I want you to think about how good those yields are compared to what they usually grow. Did they have enough storage for this crop? You'll say what their storage is built for is wheat. What's an average wheat yield up there? Yeah, maybe 70, 80 bushels per acre. They're getting 140 out of corn. What's this mean? Their storage doesn't go near as far for this crop anymore, which means they had to put a lot more outside. In fact, the biggest pile of corn I've seen all year this year wasn't here in Iowa. It was actually just across the border from North Dakota in Minnesota, right outside of Fargo. Gigantic pile. You could ski on it for days because they didn't have enough room to store their corn. Now, let's face it, do you want to be storing corn up there outside for long? I mean, you can. But no, their challenge was they weren't built to store it. Why? Because they're used to moving their crop along. And when you think about that North Dakota crop, how's it move? Rail. How early do you have to buy that rail car, get it in place to move it at harvest time? 5 months, which puts you where? Around June? I was going to say. So you got to look at the crop in June, figure out how big a crop you're going to have, and then you start to book that transportation. Well, what'd your crop look like in June? Yeah. So do you think they booked enough rail cars? No. What do you think happened to their basis then? Oh yeah, it dropped like a rock. So not only have they been watching their futures prices drop, but their basis has just been hammered because they couldn't move the crop. Which means these price movements we've been seeing on the corn and soybean side, they're being magnified there. And when you look up there, they can grow beans as well. Do they have the room to store some beans? Yeah, I could argue they're better than corn. But there's also another reason why I think you're going to see the Dakotas move more towards beans. That's going to be related to that biofuel development. Give me about 20 minutes before we get there. But we'll talk about why we're seeing this shift from corn to beans. But as you look, you need to not only look at what's happening US wise, but I would argue you need to look globally. Because as you look at that export potential we have, we've always got to look to see what's happening worldwide. And what's happening worldwide is not only did the US have a record crop, but the world had a record crop. In fact, if you take the US out of it, which is what that foreign line is behind me, that's a record crop. So these $6 corn prices that we had the last couple of years, that wasn't just a hot incentive for us to grow more corn. That's a hot incentive for everybody. And how did the world's farmers respond? They grew more corn, as they should. So we're seeing a lot more competition. And that competition, I would argue, hit us at a very vulnerable time. Because I take us back, a couple of years ago, we had corn prices in the $6, $7 range. Let me pick on one of our countries there, Brazil. If you look at Brazil, their record crop actually came in 2022, not 2023. When they hit that record, what happened to their prices? They backed off. So our prices are up here, Brazil's pricing down here. Who would you want to buy from? We saw a lot of export losses because we were outpricing the rest of the world. And now that we've brought our prices back down in line, we're trying to gain that market share back. But it's more challenging because there's more corn out there than ever before. There's more beans out there than ever before. In fact, arguably the biggest change in the crop markets over the past 5 years is hiding in this table. 5 years ago, I'd tell you we'd been looking at record world soybean production, but I'd also be able to tell you that we were still the top producer of soybeans in the world. Are we that today? No, who's number one? And by how much? Think about that. Look at that. I mean, it's amazing. About 50% growth in the last 5 years. Does that change the dynamics of soybean exports? Yeah, we've got a lot more competition. It's a lot harder to make those international sales now than ever before. And so that is a big challenge. That's also why we spend a lot more time talking about South American weather than ever before, because that's, let's face it, that's where the growth has been. And what they've been facing down there is arguably the same thing we've been facing down here. That El Nino La Nina cycle also creates droughts down there. In fact, we've been watching the same thing. Just as our drought's been moving around up here, their drought's been moving around down there. In fact, let me take you back here. When you're looking at something like soybeans here, you'll notice that Argentina is basically doubling production this year. Well, that's not because they suddenly got a lot more acres. It's because in 2022, Argentina was the heart of the drought area in South America. 2023, that Hart moved into Brazil. So we're seeing the same sorts of, if you will, shifting yield patterns here, but still yield growth when we look across the board. The world production is a big issue, which brings me to my favorite slide of all time. You're only going to steal one map from me. This is the map to steal because it tells the story of why global agriculture looks the way it does. What this actually is a map of soil quality around the globe. Basically, anywhere where you see some color on this map, you can farm that ground. But we know not all dirt is created equal. What you really want to concentrate on are the bright green spots, because those are highly productive, highly resilient soils. Now, this is our entire planet. How many big green spots do you see? I'd give you 3. We live in one. We've been complaining about the competition coming out of number 2, and there's a war right now in the middle of number 3. When you look at those 3 green spots, they're historically tied to individual crops. The one we live in is the Corn Belt. The one we complain about in South America, well, let's face it, that's the soybean juggernaut right now. And that one that's over in Eastern Europe, that was known for wheat. It was the wheat belt of the former Soviet Union. Which now, what are they growing there? Corn and soybean. You can think of them like North Dakota. Used to be wheat country, been moving into corn and soybean. Why? Because that's where the profits have been over the past couple of decades. But you see those three green spots, those are the places that can not only produce crops to meet local needs, they can produce enough to meet global needs. That's where supplies come from. Now I want you to stare at this map and think about where's agricultural demand come from? Or to put it another way, where do the people live on this map? China. India. So what you're basically telling me is that little spot right there. Not many green spots in there. Where do they get what they need? Trade. And it was that drove our record pricing over the past couple of years. It was that area that took off in terms of income growth. It's that area that now has backed off. And I'm going to argue it's because of the post-COVID boom. Well, whenever you get a run like that, there's always a cooling down period. We're in that now. And as their economies have cooled down, that meant their income growth slowed. And that slows down consumption demand. Then that cherry on the top I talked about, the phase one trade deal, it was only good for 2 years. Would you like to guess which two? No, 2021. By 22, it was gone. And that's why we watch those exports drop. So this map helps explain a lot of what's going on out there. But let me lay out the tale this way. When we're looking there, the post-COVID boom, okay, that one's done, it's played out. The one I want you to think about is the income potential growth, because I'm going to argue it's income growth that really drives consumption. And I joke I'm a personification of that. When I graduated high school, I weighed 98 pounds. Went to college, got a good degree, went on to grad school. Turned out the grad school liked me so much they hired me. I've got a good paying job now. And look at me today. I am now twice the man I once was. The key to demand is not how many mouths there are to feed out there. The key is what sort of money do those mouths have. And what we've been watching over the past 20 years is that area in Southeast Asia. Yeah, they've been growing in terms of population, but it's more important they've been growing in terms of income. In fact, I want you to think about those two big countries, China and India. There's a good reason why we talk a lot about one and barely anything about the other. They're the same size population-wise. In fact, I could argue India is bigger. But which one consumes more? China. It's the income. And that's the big key. When I'm looking forward, I'm going to tell you there's income growth down there, but what's happening right now is we're seeing it shift. China has been the juggernaut for the past 20 years. China is getting ready to fall back a bit. But when you look at other parts of Southeast Asia, including India, especially I'm looking at Malaysia, Indonesia, Vietnam, that's where you're going to see more income growth. That's where we're going to see more export growth as we look out over the next few years. Challenge, though, is it takes time to build that up. When we look at what happened to us on the soybean side, I'm going to argue the export problem started about this time last year, and they're still here today. Now, in this case, what this is a graph where we track weekly export sales. So USDA is always looking what's happening within the international markets. The black line, let's call that average. That's our 5-year average on export sales. Notice I'm going from my year perspective, starting in September, looking through August. So this is going crop to crop. The blue line's that record demand. That was 2021. The green line was 2022. The red line is where we're at right now with 2023. You'll notice that gap opened up about this time. It grew to about 300 million bushels, and it's basically been here ever since. Now, when we finished out the marketing year out here, basically, last fall, what I was seeing was a cut across the board. China was down, Mexico was down, European Union was down. Almost everywhere I looked, we were down. Because again, we were pricing up here and Brazil was pricing down here. So it made sense everybody moved. Now our prices have come back down where we should be more competitive, but we still haven't made up the gap. Why not? I was going to say, not that China doesn't like us, but China could still argue they can still source beans from Brazil just a wee bit cheaper still. When you look at that gap, it is now all China. When I look at places like Europe's actually up, Indonesia's up now, we are seeing, let's call it, we're back where we should be with pretty much the rest of the world, but China is still the problem. And the problem with that is that China is the big juggernaut when it comes to soybean demand worldwide. In fact, when you look at our export sales, last year they were 60% of our market. This year, even though they're down 300 million bushels, they're still 56% of our market. They're gigantic. So it's hard to replace them with anybody else. And so the soybean market's only going to go where the Chinese market will take it. And right now, that Chinese market hasn't come back yet. Now, the one sign that I've been encouraged by is, are they starting to nibble in this market? They are. In fact, let me take you back here. When I go back to this one, if I can get back there. There we go. I want you to notice that little jump right there. So there's a little hitch in the red line. What was that? That was China nibbling in the market. In fact, I got to watch that one in person because they actually did it in Des Moines. They had a deal around the World Food Prize. They had a thing, I think they called it the U.S.-China Trade Forum. What it was a big contract signing. Basically, U.S. companies, Chinese companies signing a contract, trading some beans. That was that week. But we haven't seen anything additional really since then. So the question is, will China come back there? Because I'm going to argue that is a big key as we look out there for growth, because I'm constantly looking at is, can we get back to something close to that demand we had 2-3 years ago? And I believe corn is signaling that we're on our way there, but it's going to take some time. In this case, you can see that the corn market got hit much earlier than soybeans. We saw exports fall even more quickly. That gap stayed there through the entire marketing year of 2022. But here in 2023, we've seen some recovery. We've gotten back up to normal. What's been happening there is we've seen growth almost everywhere except for that one place, China. But here, we can cobble together enough demand outside of China that we don't need China to grow. In fact, as you look here, Mexico's up, and that's very important for us because they're our top market in corn. But you look down the line, Japan's up, Colombia's up, South Korea's up, Canada's up. My favorite one to pick on there is Colombia. Because I'm sure that when I said Colombia and you thought, commodities that start with C, I'm sure corn was at the top of the list. But the idea is they have become our third biggest market in corn. And I'm going to argue it's because when you look at that list I've got up there, so I've got 6 countries listed individually. Those are our top 6 markets in corn. What they all have in common is that they all have either currently have or had a trade deal with us. And 5 of the 6 had a trade deal that lowered the tariffs that we face. And when you lower tariffs, we tend to see additional export sales out of us. Would you like to guess which one out of the 6 didn't lower tariffs? That's that phase 1 deal. That was let's call it the bad thing about the phase 1 deal, is it stopped the bleeding from the tariffs, but it didn't let them heal. We still have those tariffs in place. But when you knock those tariffs out, what you get is places like Colombia, which you don't think of as a hotbed of economic activity, but they continue to slowly grow. We signed a free trade deal with them 10 years ago. 10 years ago, they weren't even in our top 20. Now they're number 3. Trade deals do tend to benefit us, but it takes a few years to build in. It's sort of like rebuilding the cattle. It takes time, but that growth is meaningful as we look out. And that's the deal. As I look forward, I see that growth happening. In fact, when you look at like Mexico, the idea is they're becoming like China to us in the corn market. Tremendous growth there, despite the problems we have with them right now. They're still a growing market for us. Yes, sir. Well, so that's the deal. So the question really is the GM versus non-GM. And what you're seeing there is, I'll say it this way. I think that's a lot ado about nothing. And here's why I say that. So the president of Mexico has announced that he doesn't want to buy GM corn. Wants to put that in place next year. When he said it, our trade representative went nuts. We said, you can't do that under the trade deal. We're arguing about that now. But at the same time, too, Mexico is also having a presidential election like we are. And guess what? The guy who said that proclamation, he's not running for office again. And when you look at the 2 leading candidates who could end up being president, neither one has said that they're going to do that. My guess is because they're not going to do that. Why? Let's face it, do they need our corn? If they're buying this much corn, they need corn. What are they buying this corn for? Feed, their livestock industry. And the other thing that they've been facing is, let's face it, the drought doesn't stop at our border, does it? They've been dealing with drought as well. That has helped boost their demand, but they've been a strong market for us for the past 15, 20 years. Arguably, when we signed the NAFTA deal, which is now the USMCA deal, you've watched, if you will, Mexico was my first Colombia. Same thing happened with them. They used to be a small market. Now they're the biggest market we've got out there. And actually a fairly dependable one. We have a much easier time dealing with them than we do with China. So as you look, like I say, I see potential for gaining back some of that export, pace that we've had from a few years back. That's going to be the key to me as we look at pricing, because when I look at other sets of demand, feed demand is related to meat production. And as long as the cows are still shrinking, I have a hard time seeing feed demand growing. And let's face it, as USDA looks out here, they say beef production will shrink in 2024. In fact, the best guess is they will shrink again in 2025. And that they will shrink again in 2026. Because it's going to take us that long to rebuild the herd. So I can't get quick growth here. Well, could I get it from the biofuel side? Nope, because this industry is running about as hard as it can right now. But I would say this industry also gave me insights as to where the next wave's coming from. And it really came because of COVID. To me, COVID highlighted some changes that were coming at us, but we didn't know how fast. And I'd argue the biggest changes in our energy markets. Because what we're doing is we're changing the way we shop. And by doing that, that changes what transportation fuels we need. When you needed something 5 years ago, you hopped in your truck, you drove into town, you bought it, you hauled it home. What fuel did you use? Gasoline, ethanol. Today, you need something. What do? Yeah, order it online. I joked I learned this through Christmas card photos because there was a new person showing up in the family photo. Who was it? The Amazon delivery driver. Because they become like family. Heck, the guy who ends in my territory, his name's Mike. I've known him for about 6 months now because he's always in the neighborhood. Guys like family, which has changed the dynamics. Where we're seeing growth is not here on the gasoline side with ethanol. It's in diesel, and specifically renewable diesel. Now, And you'll notice I separate biodiesel and renewable diesel. The reason I do that is because they're two different fuels. They're made out of the same stuff. They're targeting the same market. But the one, biodiesel, I call it a good fuel, not a great fuel. Why? Biodiesel in the wintertime, what's its biggest problem? Gels up. How do you fix that? Don't put it in there or blend it with regular diesel. It means you're always tied to petroleum product. Renewable diesel, where you take these same feedstocks, mainly soybean oil or animal fat, and you refine it like it's crude oil. What do you get out the back end? Diesel. Renewable diesel is diesel. It's chemically the same. You can't tell the difference. The only difference is the feedstock. Instead of using crude oil, you're using soybean oil or corn oil or canola oil or animal fats, grease, yellow or white. You can use it all. In fact, we do. Just looking at the feedstock usage just over the last 2 years here. And you can see this industry has doubled over the past couple of years, but the biggest chunk's in soybean. Why? Because that's the type of feedstock that we can grow the most quickly over time. And that's putting a lot of pressure long term on the soybean market. So much so that we're now investing in new crushing facilities. And this may be the most important map for me as far as that talk about, I said the Dakotas are going to plant more beans. The biggest reason I would argue why are those 3 light teal dots you see up there in North Dakota, because those are brand new soybean crushers. Now I want you to think of building those soybean crushers as like building an ethanol plant here in Iowa. When we built those ethanol plants, did that help pricing here in Iowa? Because you're building local demand that tends to be more stable and solid. Same thing now is happening on the soybean side. But you'll notice most of that growth is to our north and west. Because that's where the soybean and corn belts, let's face it, that's where they've been moving. We've expanded production that way. And if we're building these crushing facilities, they're going to produce more meal and more oil. The oil is going to go into this map. That's probably the most complicated thing I'm going to show you. This is the build out of the renewable diesel industry. The circles and dots you see behind me, those are proposed refineries. If the dots filled in, that plant is already producing fuel. The open circles are under some stage of construction or planning. That's a lot of circles and dots up there. That's looking to make a lot of renewable diesel. And what that's doing is that's putting a lot of pressure on the soybean market to create more soybean oil to feed these things. As USDA looks out there, what they see is there's growth there, but not as fast as we would like. And why? Well, I'm going to argue, how long does it take to build an oil refinery? Years. Building an oil refinery is like building up the cattle herd. It takes planning and time, lots of time. So as USDA looks out there right now, as they look out into 2024, you look at this biofuel line, top line in that gray box back there, and you can see they show continued growth in that we're building out more renewable diesel. Which means if you look up towards the top in the production line, you'll see that that production continues to go higher and higher. We're going to feed this industry over time. But as we do this, we got to figure out what to do with the meal. Well, what are we going to do with the meal? USDA says we're going to feed more of it, but we're also going to have to export a lot more of it, especially since meat production's not growing again. So these changes are occurring within the market. They're just not occurring fast enough to really push our prices higher. And that's why you see things like this. This was the close of day Friday. Markets didn't move on me yesterday due to a holiday, but they are starting to move today. As we look out there in the corn market, you'll notice there's carry all the way out to 2025. That tells me that the market is already preparing for less corn being planted this spring. Because normally we would see a drop as we transition from old to new crop there. As you look here, you'll notice there's a black line standing up like this. That's separating basically old crop versus new. Whatever's on the left of the line, that's for the 2023 crop, including that number right there. That's what the futures market says right now about USDA season average price estimate. To the right, that's 2024 crop, the crop you're about to plant, same deal. This is the season average price estimate. Right now, USDA is 480, 440. So you can see the markets are more pessimistic about what you got in the bin, but a little more optimistic as you look out to next year. Why are the markets a little more optimistic than USDA? Because the markets factor in weather's still an issue as we look out there, and two, that export market looks a little better than what USDA first thought. Now, as you look at soybeans, graph looks a little bit different. Does the market know beans are coming? Yep. You can see the drop off as we look at pricing for new crop. But again, I compare the prices here to USDA. USDA 1265 and 1130. In this case, the market is more pessimistic across the board as we look out there. Why? Because the market is actually terribly concerned that the expansion we see on the soybean side this year could overwhelm even the biofuel demand that we're building up right now. That those guys in the Dakotas are going to shift hard. For example, if I take you back to my first two slides, you'll notice corn area dropped by 3.5 million acres, but beans went up by 4. Where did the additional 500,000 acres come from? Wheat and other crops. So they see a lot of other crops giving up land to feed soybeans, possibly too much. Because here's the challenge of what we've been through. You think back over the last couple of years, I would argue this is what we saw. And I argue this is what made my job really hard teaching that class I just got out of. Because for the past couple of years, my students stared at the situation that looked like this. In this case, the green and the yellow lines are market pricing for corn and soybeans. That big black line down there at $4 on the left-hand axis for corn and $10 on the right-hand axis for soybeans, those were our production cost estimates going into the 2022 crop. So basically what we faced throughout the entire 2022 marketing year, we always had prices above those production costs. We always had a profit we could lock in, which meant when my students rolled out of bed, no matter what decision they made money. Is that normal? No. So we had some pretty healthy profits through these years, especially 2020. Well, when you think about farmers and profits, what do we do with profits? Spend them. Or as I like to say it more politically correctly, we reinvest them. We reinvest them back in agriculture, which means what? That these lines change. When we reinvest, that means we're buying, we want to have more land in production. We want to have more inputs to bring that land up productive capacity. What happens to that big black line? It goes up. On the other hand, if we do reinvest more to grow more, and we do grow more, what happens to the green and yellow lines? They come down. Is that exactly what happened in 2023? Yeah. Here's 2023. The black line went up 20%. The green lines came down to match it. Question is how far down they would go. In this case, you'll notice, yep, beans a little bit above, corn a little bit below, hence the acre shift. And now as we look at 2024, things have moved again. Would anybody like to guess which way the black line went? Up? Flat? Down? I've got all three answers now. I can get this thing. It went down. Why? Fertilizer. That is, as we look at most of our costs between 2023 and 2024 crop, seed went up a little bit. It did. But remember, did they put in the technology that gave you those yields? They sure as heck did. But fertilizer, which was so high the last couple of years, that's come down a bit. It's still high, and that's why this is still high. But it ain't $5 high anymore. 460 high. Well, look at these markets. What have they done? We're basically pricing around break even, which is, like I say, normal. This is what ag markets do. In the long run, that's where we usually are. Welcome back to normal, folks. All right, I've rattled and prowled on long enough. You've interrupted me with a couple of questions, but not nearly enough. What questions, comments, or tomatoes might you have for me? Shoot. Oats? I will say it this way. Historically, in the past, yes. These last, say, 20 years, I would argue no. And in fact, if anything, what we've seen is we're seeing a transition now where I'm going to argue, I used to be able to say that, oats sort of led because it was feed demand that sort of drug everything else around. Now I'm going to argue it's export demand that drags everything else around. And I'm going to tell you what's the leader now? Corn, actually. Beans tends to follow. But when beans moves, it can throw everything off. And it goes back to, bear with me. I got to take you all the way back to the front. When you think about what's changed in the marketplace, it goes back to those tables up front. And when you're looking there, I'll point out on the soybean side, one of the reasons that soybeans can overwhelm what's happening in the other crops markets is because it is much more sensitive to export potential. Compare the export line to production line. How much of this crop usually leaves the country? I get the corn. I got the corn. Me and this clicker do not get along. So, how much of this crop leaves the country? Darn near half. So if you think about it, it's really export sensitive. And what's been happening over time is, like I say, our exports are now driving where our prices finally end up. But I would say the market still does lean on corn to get that initial signal, because the corn market globally tends to move first, soybeans tends to follow, and oats doesn't move the export needle at all. In fact, that's why you see wheat often trailing the other two crops as well. I don't have a wheat table, but the idea is when you look at wheat exports, they don't move nearly as much. There are. They could. I think the other big deal that we will watch is, are we seeing a push to broader diversity on the land? I would argue, yeah. But the question has always been, do you have the market potential to do that? Like, can Iowa grow weeds? We can, but it really hasn't made sense for us to try to do it. Haven't had an outlet. That is a big challenge for it. So if you start to develop those outlets, well, we see that. The other thing I'm watching is, think about things like, if we've been watching this corn and soybean belt move more to the north and west, but what that also means is we should be able to see more double cropping potential here in Iowa. That's something traditionally we have not done. Why? Because the weather conditions wouldn't allow it. Now I would argue weather conditions have changed enough where maybe it makes sense. And does 3 crops out of 2 years beat 2 crops out of 2 years? Yeah, usually does. And in fact, when we think worldwide, you think about that expansion down in Brazil and Argentina. A lot of that is driven because of the double crop potential. Not necessarily just adding additional acres. It's using these acres more intensively. And I think we will see more of that in the coming years as well. Yes, sir. Yeah, when you look at production cost, they're lower than we are. When you look at transportation cost, we tend to be lower than they are. And on balance, what tends to happen is those things tend to offset each other, and we tend to price about the same as we did. What we watched, especially throughout, that big drop you see there in 2022, we were pricing well over $1 a bushel higher for a while than Brazil. I don't care who you are as a customer. You're going to move if the price gap is that big. Because we were, like I say, we were hitting 13, 14. Brazil was popping down here in the 11s because they had a record crop, but they didn't have the same demand pressures we were facing up here. And so they were able to price much more effectively into especially those Southeast Asian. So as you look today, that has gone away, but how did we get there? It wasn't that Brazil's price came up to ours, it was that ours came down towards Brazil's. And that goes back to because we had those record crops coming in all over the place worldwide. When you look at that production, it's been amazing. I mean, think about that. You know, in this case, you're talking about 20 million tons of growth in a year where the base is basically 380. That means we saw production jump by over 7% year on year. That's an incredible amount of supply hitting the market. That's what's pushing prices down. Yes, sir.
It's always our wild card.
Sure.
Barring any great weather, floods, or drought, we're looking at what, 3 to 5 years before some of these plants get built and that basis is approved and the price.
Yeah, actually, I will tell you, I think some of them will come on quicker than that. When you looked at that biofuel map, the one I'm really watching right now, right there, is that Phillips 66 plant. Everything I've heard tells me that one comes online this year. The size of the circle tells you how big the refinery is. That's the big dog I'm watching. That one, why am I watching that one most intensely? Is because I noticed something when I went back and watched. Actually, it was the golden shovel ceremony for the Shell Rock facility. Basically, that new heel tot there in Iowa. One of the representatives there was from Phillips 66. They basically had a standing deal before they put a shovel in the ground at that Shell Rock facility that when they got up and running and that blue dot or that blue circle for Phillips 66 got up and running, they knew they had a home for their oil. So that is a big one to watch. The big thing here would be, I'm going to describe it like the ethanol market. I'm going to say the ethanol market was great for those in corn production, not necessarily good for those that were building the ethanol plants. Because when you think about those ethanol plants, how many are still owned by the first people that built them? Not very many. Why? They lost some money on them. Same thing's going to happen here. This is going to be good for soybeans, but not necessarily good for, and in this case, as you're looking here, you'll notice there's names by each little dot up there. That's the major investor in those renewable diesel facilities. They're the ones that I think some of them are going to lose a good boatload of money. Because I want you to think of each of these is an oil refinery. An oil refinery is not a cheap thing to build.
Are they more accepted because we have bio-based products as opposed to oil product? I know we don't want oil spills of any kind, but if soybean oil spills, it's not nearly environmentally hazardous.
I would argue, yeah, it probably helps them some, but not a great deal. Because I look at it as, you know, let's face it, you know, there are lots of things that are considered clean energy and things like that. But do we want them in our backyard? Heck no, we have arguments about solar farms and wind farms. And yeah, these things are causing fets.
Good somewhere, just not mine.
Good somewhere, just not here. And in fact, what's driving a lot of this, you can think of it as the renewable diesel thing is the same thing that is driving the wind farms. It's the same thing that's driving the solar farms. It's the same thing that's driving the carbon pipeline argument. It's all about creating an energy source that has less carbon in it. And right now, there's this big combination of consumer money and taxpayer support that's coming together that's pushing all of these things right now. And arguably, when I look at it, it's like because there's not one silver bullet to answer this question about how do you lower carbon intensity. Lots of people like to go, well, electric's what it's going to be. And I'm like, no, it's not. Because you've got the same issue there. Our electrical grid right now isn't big enough for us to move to electric cars. Does anybody want an electrical generation station in their backyard? No. Who wants the high voltage lines running through their property? Does it sound like the same argument that we're seeing on the carbon pipe? Yeah. Why? Because it is the same argument. I think the challenge here is that it takes not a silver bullet or one thing off the menu item. It takes the entire menu. You're going to see developments for ethanol. You're going to see developments with biodiesel. You're going to see development in wind, in solar, in electricity that all come together to address the issue. But they're all being driven by the same thing. All right, with that, I think I need to be done. Yep. Yeah, in fact, that's something I will tell you. I like the prospects of that more than I do this one. And here's why. When you look at producing jet fuel out of renewable diesel, I'm going to argue the cost savings have already been wrung out of that because it's basically oil refinery. And let's face it, petroleum's figured out how to wring the cost out of that for 100 years. They know how to do that well. The ethanol, the jet fuel, is a new technology, new process. We got better potential to wring cost savings out of that to make it competitive. It's just we haven't proven we can do it at scale. So that's why I appreciate, especially coming after the agronomic talk, because I noticed, he talks about, we've seen this in plots, now let's take it to the field. Does it actually still work? You've got the same issue when you're looking at it. With that, I need to stop. Thank you for your time and patience. May you have a wonderful day.